Welcome to Moving Iron with Casey Seymour and Greg Peterson, the podcast for anyone and everyone involved and interested in the business of ag equipment. If you want to understand what trends and market forces are impacting the price of your iron, you've come to the right place. Buckle up, it's time to move some iron.
Hello and welcome to Moving Iron Podcast. This edition of the Moving Iron Podcast is brought to you by John Deere. We got Greg Machinery Pete Peterson on here to talk about what's happening in the world of auction. Greg, how you doing?
I'm doing well, Casey. Did you have a good Thanksgiving?
I did, man. How about you?
Yep, I got stuffing, I got pie, potatoes, turkey. Machinery Pete was a happy boy.
Yeah, you can't really beat that with sticks. It's one of my favorite holidays. There's obviously preparing the meal and those kind of things. There's some work going into it, but that's really it. There's no pressure outside of that. No gifts, no cards, no anything. You get to eat and watch football. I don't know how much more you could ask for in a holiday. So I'm a big fan of Thanksgiving.
The only problem is if you got to watch Minnesota Vikings football, as I do, all of that good food sort of turns in your stomach. No, hey, it's all good. It's not our year. That's fine. We're like farmers. We Vikings fans. You got to be optimistic about next year. That's all we got.
That's all you got. That's all you got. Next year's always the year. Sound like a Nebraska football fan. Next year we're going to win the national title.
Yeah, those Hawkeyes kind of danced on them.
They did.
Hey, patience. It's I love Husker fans. I've been to a game down there a couple years ago, and their fans are awesome. So they just incrementally keep getting better. That's just one foot in front of the other, right?
Something like that. Yep. Something like that.
Patience is a virtue. That's a truth in business and sports, I think.
Yeah, I think you're right. So, all right, man. Well, you had the week before Thanksgiving. Typically, it's a quiet week when you start looking at things. But this week was this year is a little bit different. You had some sales pop up, and that were some big winners, all things considered.
Yeah, this year you're right, Casey. November leading into Thanksgiving was very, very busy. The number of sales and really some nice farm auctions. Of course, we've talked last couple of months. Number of farm auctions and total auctions up on the magnitude of about 14.5% so far this year through October. A couple that caught my eye. One coming into Thanksgiving was November 20th out in Hilliard, Ohio. It was a really nice farm auction it was by Wilson National LLC. Really good auction company I worked with for quite a number of years. And some eye-popping numbers, I thought. On the planter side, they had a 24 model John Deere 1795, 24 or 20 inch that brought $295,000, which that's, as I scan our auction price data for the year, we've seen over 1,100 planters sold in 2025. That is the second highest 24 row auction price I've seen so far this year. Of course, it was like new 24 model. But Combine, I thought, did well for an 18 model S780, given that it had 1,120 engine hours hard cash. That did $259 with no heads. And again, tractors with a little bit of age on them, if they're nice, boy, they're really strong. They had a 11 model, so pre-def, 8285R, low hours, 1,380 hours, so for $221, which that's the highest auction price on an 8285R in 21 months. And it's actually the fifth highest I've ever seen. So times are tough. But again, that 221, when you compare it to, it's a 1 or 2 year old one worth in that horsepower range, I think that's what people are looking at. And then when a nice one shows up like this, November 20th, 1,380 hours, you can see there was a bunch of people that wanted it at 221.
Yeah, I think it kind of goes back to what we've talked about here. Like I've talked about in the past, when you start looking at the marketplace we're in right now, when you've kind of hit the bottom of this, when you start looking at some of that 5-year-old, 7-year-old stuff, and you start seeing what they're bringing and what that looks like, and you start seeing people like you're talking about here bringing some premium prices for those machines, that to me is just another one of those telltale signs that, hey, we're at a bottom and we're working our way out of it. And again, we've talked about this all year, and here we are again. It's just each week kind of gets building on week after week, and we're starting to see that kind of roll a little bit. As you start looking into the end of the year, I've seen a few of them pop up, but like, for example, Van Wall's got a big iron auction coming up here. I think the Monday, the 10th, I think, if I'm correct on that, something like that, whatever the 10th is. There's one in Boone, Iowa. They got some stuff coming up, but you're not seeing there's a lot of good stuff on that one, but you're not seeing a lot of big, massive auctions roll through, but you're seeing a lot of onesie twosie stuff kind of popping in and out of here and those kind of things. And some of the stuff you're talking about there, where you're seeing some retirement sales and those kind of things, estate sales and so on and so forth, move their way through. Still feels, but there's still a lot of activity. There might be a none of the big massive auctions that we're used to seeing this time of year, but there's a lot of smaller auctions with good stuff on those auctions.
Yeah, I think dealers have learned a lot over the past number of years, and they're arcing back to, and you and I go back, we talk about 14, 15, 16, working out of that last downturn. You think back then, and there were, dealership events where it was a massive amount of equipment from that one dealership, whether you had 5, 6, 10 stores, whatever. And now, like you said, Casey, you'll see a lot of sales where a dealer will kind of sneak, I don't say sneak, but just, they put, dozen tractors out and maybe 4 combines and 3 sprayers and 4 planters. And again, from the dealer side, of course, you're hoping the auction prices would be higher. But I mean, I would feel pretty good right now if I'm a dealer, selectively putting some equipment out into this market at auction. And the reason I say that, it's just because this flow of data we're looking at. So, for example, 2 days after Thanksgiving, on this past Saturday, out in New Bloomington, Ohio, people remember I was talking about the sale on the front end. It was Maddox Farms, Brad Maddox. I was able to get on the farm and do a preview with Ben Higgins Realty and Auction a couple weeks out, walked through the whole line. Brad was a big farmer, and he had a fertilizer operation. So he had a lot of big late model stuff, and he had some health issues. People wonder, well, why is he quote unquote retiring, whatever? Had some health issues. So what I was looking at was what all the 24 model stuff was going to bring. So he had a 24 model 9RX 640. It was a really beautiful machine. 297 hours, went for $525,000. Now, when I post that on social media, and I understand it, but a lot of people look at that and go, oh my God, that's incredibly soft. And that's incorrect, because we're talking hard cash auction. You got to write a check today. And that actually is the highest auction price all of this year on a 9RX 640. And on the same sale, they had 5 9RX 540s. Now, you and I know, Casey, whether you're a dealer or farmer, you sell 5 late model big ticket. That's a tough nut.
Yep.
But I thought they sold well, the 2 highest ones, and they ranged in hours from like 109 to 383. The 2 highest ones went 487. And again, that's the highest this year on the 9RX 540. Same story on the combine, the 24 model X9 1000. That had 406 engine hours and went for 520 with no heads. Again, you can look at that and say, oh my God, that's cheap. But that's the highest auction price this year on an X9 1000. They set a record on the 21 model Deere 330G skid steer. It was like new, 171 hours on it. That brought $60K. So I think the sale, I talked to Ben Higgins afterwards, and he said Brad was happy. You always hope it sells for more as a seller, but those numbers to me, more proof, even on the 1-year-old stuff, that the market's, definitely found footing.
Yeah. Yeah. And that, kind of to your point, it might sound like it's up. There's a big difference between what you see stuff being advertised for out there on the dealership world and what you see at the auction, but 2 totally different animals, and they're handled totally different, right? There's a lot of different moving parts on each one of those things that really go back to what the value is. And you start looking at some of these 9RXs and stuff like that. They're like we kind of talked about earlier. A couple episodes ago, where does that 640 fall into the mix now? When you start looking at there's 3 bigger models than that, you start looking through that. What's that look like and how does that work? I think that there is there's going to be some pressure there. And I think that we're seeing that. Now, the number you just told me, I would be very happy with that number if I was a seller at an auction right now. I feel like that was a great number.
I just, that's why I've been doing this 36 years to take out, and we see this any auction I go to, and we're humans, so we all make assessments. And again, people hang their hat on the advertised price. That's because that's in their face all the time. And, it's just, I was trying, as we're talking here, I was trying to punch up the average auction price this year on a 9RX 640. Because again, generally or typically what we see here this year in 25 has been that the average has really leveled off versus 24. And we talked about last number of weeks, Casey, because that was last year. Dealers were so much more aggressive pushing stuff out to the auction market. So for example, I just found it here, and this is just, you hop into machinerypete.com, folks. You can do what I just did. John Deere 9RX 640 so far this year, average auction price 476, 786. Well, the highest is 525, the one that sold Saturday. The lowest is 394. Last year, average auction price 488, 256. So you're talking about hardly any drop at all this year on an average auction price on a 9RX 640. Now, last year, the drop was huge. It went from 596.8 down to 488. And that was because last year dealers were trying to get ahead of it. And, they did, even though they took those losses. That's why I say for those dealers now, I said sneaking or starting to put a few more pieces out at auction. It's a good time to do it. Really good time to do it.
Yep.
And if you're a dealer side, I think the trick there is, it's so hard to time any market. I mean, a stock market, whatever.
Yeah.
And you sat in the chair, Casey. You lived it and put your head on the pillow at night trying to move used inventory for decades. Sometimes if you're a dealer, I don't think it's not good to wait too long, to wait for tons of confirmation that the market has solidified. Like once it's solidified, it's solidified.
Right.
And so from a dealer side, if I'm starting to put out a few machines into this market, I mean, they're delivering prices back that are better. They've held from where they were a year ago. And I don't know how much more as a dealer you could ask for that. And on the farmer side, this bleeds into the kind of the quote unquote warning or alert you and I've been talking about since early 25. Like, just be aware that this downturn is the backside is unfolding differently than anything I've seen before. It was a quicker point to get to the leveling off, stabilized values point. And so again, these prices, if you'd have asked me 6 months ago how all this stuff was going to sell, I wouldn't have guessed this high. But the market, these prices aren't wrong. They people vote with their checkbook, and it's just reality.
Yeah. And that's what it comes down to, right? And it's everyone gets a vote at this particular junction in time. So yeah. All right, Greg, as you look as what's going on right now, as you kind of look out there, what's inventory wise out there as far as coming through auctions, what's jumping out at you right now?
Well, again, it's to me, I think it's a little bit like you said. Dealers are starting to selectively sort of go, "Oh, okay," and I think putting a few more items out onto auction market. We'll have to judge week by week, how the market absorbs that. And again, I'm not seeing it right now as this huge jump. I think we've got our hands full with the number of farm auctions. But it's interesting to me, Casey, as I watched the month of November unfold, because that's always a busy month. Farmers are very smart. They've been reading my jottings for decades. And it's just year-end tax, motivated buyers. It's a good time to sell, November, December. So
yep.
The number of farm auctions, and some of them are retirements, some of them are just downsizing, some of them are forced. It kind of doesn't matter, but it's just, there's a lot of really, really good used equipment. I mean, there was a sale Friday, day after Thanksgiving in Tennessee, Rutherford, Tennessee, sale by Top Tier Auctions. For example, they had an 08 John Deere 8530, 6,449 hours, but it looked just beautiful. And at hard cash, it brought 161.7. And that's it's the highest auction price ever on a John Deere 8530 with over 5,800 hours. So again, I think it's like we talked about all the time, but the price of new being where it is, it makes that 17-year-old 8530, even though it's got 6,400 plus hours on it, it brought 161.7. That's good and strong money. So this is the trend I'm seeing. I don't really see anything to bump it off the track. No, January is a slow month, which to me is actually not a bad time to sell because you're not competing against as much. So if you have nice stuff,
Right.
your sales tends to stick out.
Yeah.
Sometimes all this blizzard of activity in November, December, I worry that how much can the market absorb? But I'm not seeing an overload at this point. So it's, again, that footing we found is actually kind of getting a little bit stronger.
Yeah. Yep. There's a lot of, that's the best way to put it. It feels like things are getting stronger. It may not feel like it's getting stronger, but it's a slow climb out every time. It's a fast jump into the hole, right? But it's a slow climb out of it, and that's kind of where we ended up at.
I would be curious to get your take, Casey. I'll set you up with something here, just on the volume of equipment, because I know you followed that more closely than anybody I've known on dealer lots for over a decade. So on social media, just this last weekend, as I was digesting turkey and digesting the Vikings getting shut out for the first time in like 20 years, whatever, the comments on social media, it's so interesting. Some people were saying, I drive around and boy, our dealers here don't have much used inventory. And so they're kind of noticing, wow, this is different. But then other folks, particularly up in the Dakotas, there seem to be a lot of comments, people saying, whoa, our dealers are the opposite. They're jammed. Mm-hmm. So just curious where we're at right now as we come to the end of 25 overall inventory wise. What's your gut telling you, and based on where we've been before?
Kind of looking at what's out there, we're back to like pre-COVID levels of inventory, right? So we got plenty of stuff out there that shows, combine numbers are up. I mean, they're back to where they were. Tractor numbers are back to where they were. You just kind of work your way through all of them, and the inventory levels are there. They're coming down month over month over month.
Better than where we were a year ago. Would you say?
Yeah. We're better off than where we were a year ago. Not by much, but we're better. We're better off than where we were. And I think if you were in like true large ag country, like true row crop, true big wheat country, those kind of things like that, there were a lot of machines that came back into the marketplace in 23. All those trade-ins came in, so they're kind of working their way through that. When you look at if you're more in cattle and hay country, those kind of things, they are not nearly as ramped up as
right.
Other places are, because it's just
stuff's been moving.
Yeah, stuff's been moving, and whenever grain prices are up, cattle prices are down, right? And so when they flip back around, then if they're in cattle producers over the last couple of years during this cattle boom that we've seen weren't buying equipment. They're kind of starting to come buy some stuff now, but they were getting loans paid up, buying more cows, looking at how do we expand more pasture land, those kind of things. Like a lot of that stuff was being in play right now, long before equipment. And I think that's the other thing too, that's maybe has changed a little bit in the marketplace from the aspect of where the movement of stuff is. When I first started doing this, where equipment fell on what I'm going to do with my money this year on the farming operation was like 1 or 2. And now you start looking where equipment's at, it's barely in the top 10 anymore. You're like 6, 7, 8, in the frame of going and buying stuff, because they're looking at, of course you're going to pay down, get the bank taken care of. You're going to look at how, if I'm growing my operation, inputs, yada, yada, yada. And then you finally get down to equipment. And that's been driving some of that market too. End of the year buying, is still there. No, it's not gone anywhere, but the conversation I had with a lot of folks before I left the dealership was, well, we're going to take care of some inputs first, get some of that stuff kind of pre-ordered some of our inputs at this price, and then start looking stuff down the way. So that's also had an effect on what the buying nature of equipment is too. So
okay, I got one for you, Casey. When we haven't, to listeners or viewers out there, Casey and I have not talked about this before we were recording, so I'm just putting him on the spot. But excuse me, fighting a little cold here. But okay, so dealerships, generally speaking, have got much larger. I've
Yeah.
been really interested to see some of these dealerships that are jumping geographies, different, so I'm in the Southeast, but whoop, now I got 10, 15 stores in Ohio, or, I got some in Kansas and I got some down South.
Yeah.
From a straight business 101 standpoint, again, looking at it kind of technically, when that started to happen, I was very intrigued by that. Now, my dad was a dealer, my brothers were dealers. I never got in the business, but just the diversification possible, because, you mentioned before about, well, if you're true row crop heavy, like you're stuck up here where I am in Minnesota, you got a lot of the big machines. And there are times a dealer, I think, might be envious of, like, obviously what's been happening with livestock. I mean, the ups and downs, but it's been pretty strong. Now, I know that said, there's logistic challenges managing a dealership with massively different footprints and culture, Midwest versus South. What's your
Right.
take on what's happened and where that's at? And you think we'll see more of that happening going forward?
Well, I mean, I think you said it right there. It's dynamically different mindsets, right? So, if you're in a predominantly, wheat kind of area, and then there's another part of your operation, dealership operation, that is right in the middle of the blackest dirt on the planet, and there's the way they buy equipment and look at equipment and sell it, and all that stuff is totally different,
Right.
and how that approach is, right? There is a natural progression of some of these. There's been some of these guys that are like deep south and coming up into like Indiana and then that area and buying stuff. There's a natural flow of equipment from the north to the south, and also from the south to the north. Stuff coming from the north usually is a higher spec stuff that's getting down into the south, where there's not a lot of high spec equipment, just because of their operations and how they function. Whereas a lot of those lower spec machines come to the north, and you see them in feedlot operations and those kind of things, where they don't need the highest spec stuff, and their creature features aren't necessarily what they're after, and those kind of things. So you're seeing some of that. I do think there's going to be more of that, where you're going to see.
I do too.
Just from a manufacturer's perspective, having one giant behemoth in the middle of all that has its pros and cons, just like it had. There's pros and cons just from stuff jumping around and things. But the culture thing is the biggest aspect of that.
Right.
It's the biggest driver in that, and
Biggest challenge too. Yeah.
There's enough culture problems with neighboring people that come together, much less, states apart. So it's, as you watch these things come together, yeah, there's going to be more of that, and they're going to continue to push this through. And I think one of the big things about this is, whether you're for or against the size of dealerships and how they grow and those kind of things, the complexity of equipment and technology associated with equipment is going to drive dealers to be bigger, and because they have to have specialized people that can take care of things, and it is what it is, right?
Right.
And
and frankly, also, go ahead.
No, go ahead.
Well, I was just going to say, and frankly, to deal with downturns, because that to me was always interesting. Again, the diversification. So, for example, if you had a footprint that was in the livestock area the past couple of years as a dealership, that maybe helps lift up. Or if you're in the cotton country and it's like, oh my God, that's the point. Straight from a business technical standpoint, when I first started to see this happening with dealerships, I was like, totally get it. Going to be a lot of challenges in that, but understand why they're doing it.
Right.
So.
Yeah, and that's the side of that is. I get the whole everyone goes to war and whatever else, and you're going to pit two deer dealers against each other, two case dealers against each other, whatever it is that you're doing.
Yeah.
I understand all that, but at the end of the day, it's there comes a point in time when, I'll give you a great example of this. There's a dealership that I worked at, and there were two farmers that kind of were in the same area. There's about, I can't remember how many stores we had at the time, but 4 or 5 of the stores that we had, all these two guys kind of could call home, right?
Right.
And they, did back and forth, back and forth, back and forth. They were all individually owned and operated dealerships.
Sure.
Sooner or later, someone's going to be out of just pure attrition. There's just going to be the one that's left, right? And
Right.
They're all going to just continue to get bigger. And the point of getting bigger and the point of doing that was take care of that customer better, right?
Yeah.
And ultimately, I think I read all kinds of stuff on social media about, man, it was so much better when I had my local dealership because I could go talk to ABC, right? And I get that.
Yeah.
I totally get that. Believe me, I totally get that. But there's a point where, from a business perspective, do you want a specialist taking care of these complex issues that you see on these machines, or do you want a jack of all trades that kind of knows a little bit of everything and kind of sort of make sure everything sort of runs right? You can't expect one person at a dealership, because most dealerships, even the biggest dealerships, like the single store dealership, 40 employees, right? And you're going to have 12 or 15 of those are technicians, and 3 or 4 of those guys are sales guys, and you got some admin people, and you got parts people, and those kind of things. And you're expecting a person to know everything there is to know about every piece of equipment, and it's just hard.
Yeah.
It's just hard to do.
Yeah, that's good. We could probably, if we could open this up to listeners, this segment could turn into like a 12-hour segment, Casey.
And it would turn into a long segment that would be filled with emotion.
You'd probably need a little editing skills on the profanity that might flow around. But like you said,
I get it. I totally get it, man. You're preaching to the choir here. I get it. I totally get it. But at some point in time, there is do you like that technology specialist that comes out to your farm and helps you do those things?
The one thing when it comes to a dealership, and this is just my observation, my dad was a third-generation dealer, little town, West Central Minnesota. He had 2 stores back in the late 70s, early 80s, and it grew a little over the years, went up to 4 stores. But as I observed it, watching my dad, it was a different era. My dad's 88 now. They didn't come home, and guys just didn't talk business with you. Kept it inside. But It occurred to me that what the business was, yes, you're trying to move this big, high-priced iron to help, obviously. But I always thought the business of being a farm equipment dealer was personal with your farmers.
Right.
And the dealers needed their farmers at that time in their areas to be as viable and as strong as they could. But just as much, the farmers needed their dealers to be healthy and responsive to what you need as a farmer.
Right.
Now, as these dealerships have gotten bigger, and maybe it's not fair for me, I never sat in your chair. So it just, to me, seems like that's the opportunity, whether a dealership has 10 stores in 5 different states or 50 stores, whatever. But can you effectively connect with your local farm? You have to take care of them, and they need you. And like you say, the dealerships have to invest in their people. And I know that's often said on the dealership defense, like, well, yes, you don't have as many stores to compete, deals off of, but we're investing in the people to take, as long as it's the farmer judges it to go and get up, they're taking care of me. That's the equilibrium. Now, as a dealer, that's what I'd be running towards, because I think there's competitive advantage. However you get there, if you can get your dealership to be perceived as, we maybe have a boatload of stores, but we're doing everything we can to take care of Joe Farmer. And when you get there, and it ain't easy to get there, and it ain't easy to stay there, but that's where that's where your profit margin is going to start beating the heck out of your competitors from the dealer side. Because why? Well, it's just because you're treating your customers better. So,
well, I think so too. Like you've talked about too, the consolidation on the dealership side that people want to talk to and point to. That same consolidation is happening on the farmer side. Everything is that way. And if you go back 20 years and look at how many potential customers that a dealership in a area had compared to where it's at today, it's not the same number of people, right? It's just not the same number of people. And so as a dealership, I get torn both ways on this, right? And but I get it from both sides, right? I understand it from both
Yeah.
sides, and I get it and totally understand on both sides why the whole thing is the way it is, and the conversation that's there. Um,
I think, Casey, this makes me think of something you said, I think, a couple weeks ago. And I know it came from the chair you sat in on the dealership side, but it's so much more important now from a farmer's perspective to be proactive, whether it's your
yeah,
lender or the conversations you have with, maybe it's, the two big dealership groups you're working, whatever. But you can't sit back. So to me, a lot has changed and a lot is going to continue to change. Now, I'm older than you, so by rights, I could be more grumpy about change because I don't like change. But you know what? That's exciting about change is whether you're a farmer or a dealer, is change equals opportunity. Now,
yeah,
that's why farmers, again, they just don't get enough credit for leaning into all the technology changes. And these are difficult things that they're having to deal with across the board, but they're good at it.
yeah,
And the best dealers are good at it too, seeing opportunities. How can we be better? And whoever, that's America. Still, with all our faults, if you can be better, that tends to win in the market.
yeah.
And that excites me, even though change is difficult. It's like let's roll up our sleeves and let's get after this thing and let's win today. That's America to me.
That's right. Yeah, and that's exactly where it's at. And there there has to be a level of proactiveness when you're looking at anything, any business that you're in. I don't care if it's agriculture or you're making widgets out somewhere in some factory. Proactively looking at what my needs are and what my thought process is, and where am I at, and what's it mean if I spend another $10,000 this year on repairs? Like, what's that look like, and what's that mean? I mean, it may mean nothing, right? But it may mean a lot too, if you start looking at that. So I don't know. I think there's just having that conversation with whoever you need to have that conversation with, whether it's your crop advisor, your sales guy at the dealership, your technician that you work with at the dealership, whatever that is, whoever those people are, bring them all into your operation and have that conversation with them. If it's
Right.
the dealership, bring in the sales guys and the service manager and the parts manager together and say, here's what I need to have happen. How can you guys help me do that?
Right.
And you work your way through that. They're not going to sit there and not be for you, because like I told my wife when I started looking at different positions when we left Wichita, I was like, we're not going to find a dealership someplace in downtown Chicago that wants to sell combines. That's just not going to happen.
Yeah.
Because there's a select group of people that want to buy your stuff, and every dealership needs every customer to be that big, small, or otherwise, to make that work. And
It's
then
the relationship.
It's a
That's
relationship thing. I mean, you want a strong dealership to help make sure that your farm operates well. Though that dealership wants to make sure that you have a strong operation, because they need you. You're the only customer base they have.
Right.
There's not like some other industry that's going to come in and buy used combines. It's farmers. That's it, right?
Okay. This episode again, folks. I'm just lobbing these things at Casey without any prep, but I'll from my side, I'll just wrap with one more thing. As I travel the country, going to these auctions, we're filming for our TV and YouTube and stuff. Most of it's small towns. Okay. And when I visit with people, if it's a physical auction, I will, I want to listen. I'll be like, hey, tell me about New Bloomington, Ohio, or, DeGraff, Minnesota, whatever. Mm-hmm. And I often ask them, how many dealerships did there used to be in town? 20, maybe 2,000 people town. And the people, they smile, and you can almost see them looking back in their memories. They go, oh, we used to have 5. And they'll say Oliver, Case, Ford, and now now they just got to 1. Now, if you take this, and again, farmers had to deal with that change over the decades. Okay. One thing is I look at the far end of the rainbow that concerns me a little bit with what's happened with the dealership consolidation and we understand why it's happened, like we've talked about. Who's going to be the buyer of an 80-store dealership?
Right.
Who's the next buyer? If you got 30 stores, 50 stores, 80 stores, who's going to buy it? And that, and whenever that would be, whatever form, I think the ag space, you obviously hear about it now with farmland. People talk about, keep China out, and we totally get where that's coming from. But on our little world of the farm equipment side, it's like, I just wonder 10, 20, 30 years down the road how that's going to play out. I don't know. But to me, it's something that, because even now, if you've got like a 50 store dealership, you've got the principals who are ag people, generally speaking, came from a 4 store and 8 store. They kept their dealer people. Ain't many people going to write a check for a 50 store dealership from ag country.
Yeah. So I think about that a lot. Right. And the dealership count, the store count of these dealerships it's something that I think will be addressed as these years go on. Right. And I think, there's going to be a lot of situations where mobile service is going to get to be a bigger deal. We're starting to see it move in there now, but you got to remember that there's a dealership there's a 50 store conglomerate, right? Big, huge, massive thing. And there's a store right in the middle of that dealership. Well, that at one point in time, that was the western edge or northern edge or southern edge or eastern edge of some dealership. That's some time, right? And they were the outpost out there holding off the hordes coming across the line there, right? Yep. Well, now they're not that anymore, right? They don't. What's the strategic function of that dealership, right? Does it need to be there? Does it need to change how it operates and works? Does it truly need to be a true brick and mortar parts and service sales hub, the whole deal, right? Or does it need to be, hey, this is a service center now, right?
Yeah.
We're going to dispatch mobile service out of this spot. Like there's all kinds of roads you can start going down now.
Yep,
to where you start, because if you look at the construction industry, some of these construction companies, like the state CAT, for example, they have an entire state. Well, they might have 10 locations or 15 locations to cover an entire state, because so much of that is dispatched via mobile service, right? It changes the dynamics quite a bit when you don't have to have all these little outposts all over the place to start to kind of set the edge on your territory, right?
Right, that's true.
As that starts going away, then you start changing the dynamics. What's that look like, right? Yep. What do our farmers need? What do our ranchers need? What services can we provide that are going to
keep them running?
Them running, that are going to do the things. And is this a necessary evil right now? Right.
Yeah.
And I think that's when you start looking at that stuff. So when I look at these big, huge 50 store, 25 store, 35, that's what I think about every time because I remember when I was at a 4-store dealership, then it went to 6, then 9, then 15, and so on and so forth, that all of those little things that were neighboring dealerships, those little outposts aren't outposts anymore. They're in the middle of the territory. And those are, that changes the dynamic of they're now inside of the castle walls, if you will. And you don't need to have this fortification that you need.
Well, I think we just looped back to what we were talking about, change and opportunity.
Right.
Whether that's farmers or dealers and how the future is going to unfold, it's going to be interesting to see. Yep. Again, from the dealer side, I would hope what would drive, the thought processes on these changes would be, and I'm sure it will be, is just how can we keep the customer at the top?
Yep.
I think we're living in an era when it's like a table with legs on it, right?
Yep.
You have your shareholder value, it has to be addressed. That's the important part. Employees, very, very important. But customer, are we staying at the top edge, taking care of our customer? And again, living in America, if you don't do that, then you're going to get your ass kicked and you're going to lose business.
Yeah.
And your margins are going to suffer. So that's sort of like the auction market, the brutal honesty of we're selling this today. It's going to bring what it's going to bring. So I think dealers will have to lean into that change and navigate their way forward, and we'll be watching. It'll be fun.
Yeah, for sure. 100%. Well, Greg, great place to stop. If folks want to reach out to you and get you to come to their auction or get you to just answer the questions for them, what's the best way to do that?
Yeah, just hit our website, folks, machinerypete.com. There's a link on the bottom. You can shoot an email to our office. They get that right to me, or just hit me on Facebook. Or if I happen to be on Twitter, Ag Twitter, message me there. Those messages come right into me quick. So yeah, love to get your just love talking with the audience. It's been fun.
Yep, I enjoy that myself. So, Greg, appreciate you being the podcast. We're going to catch you again next week.
Sounds great, Casey. Have a good one.
All right, stay tuned for more Moving Iron podcasts after these messages.
Well, there they are, mocking you.
See you next year,
Loser. That weedy area that's got you thinking, man, I hate that spot. Wish I'd sprayed better. Get the last laugh with a sprayer upgrade from John Deere. Precision upgrades that can increase your sprayer's performance, like ExactApply, advanced nozzles to give you more control at more speeds. It's just one of the many precision upgrades you'll find at johndeere.com. Now, let's see who's laughing.
All right, welcome back to Moving Iron Podcast Markets. I got Chip Dillinger here from Blue Reef Ag and Marketing to talk about what's happening in the market. Chip, how you doing?
Hey, good. Casey, how you doing? Happy Thanksgiving, I guess, post-Thanksgiving.
Post-Thanksgiving. I still feel like I just ate Thanksgiving as much food as I ate during those last 3 days. So it was, I love that holiday. There's no pressure, and all you have to do is eat. I don't know how much easier it could be. You know what I mean?
My kind of holiday. I
Right.
love it. I'm still kind of getting back to normal. You know, the day after, you're like, oh, man, why did I eat so much? You're kind of sluggish and groggy, and all you can do is lay there and watch football. So I guess
horrible.
That's why I like Thanksgiving, I guess.
Yeah, it's horrible. It's horrible. All right, let's talk a little about what's happening in the marketplace. Start off with cattle here a little bit as we go through that. We had plant closure in Lexington, Nebraska. That was about 5,000 head a day or so. Saw that pop up. You saw the last week some huge corrections in the market on the cash cattle side. A lot of moving parts there. We've seen some volatility going into that week anyway. But I guess, Chip, as you look at it now, where are we at in that volatility range, and you start to see things shore back up since that news came out?
Yeah, still fairly volatile, from a day-to-day basis in both the fats and the feeder cattle market here. But it does look like maybe we've gone a long way towards digesting the worst of that. You know, the thing that kind of quietly happened in the middle of that was right ahead of the plant closure announcement. We got a cattle on feed report, and they caught up 2 months. They caught up October and November. And both those numbers were actually fairly bullish. We have not fixed anything structurally in the cattle market, right? I mean, we still have tight numbers. We haven't expanded the herd at all. The numbers of on feed are some of the tightest we've had in years and years and years, decades maybe. And so fundamentally, not much has changed. Now, what has changed, obviously, is the tweet a couple months ago, President Trump wants cheaper beef prices. Plant closure in Nebraska, that's kind of a devastating effect, at least for that part of the state there. Thousands of jobs gone. Likely a lot of that will be picked up by other plants regionally in that area. Also, we're importing, doing away with some of the tariffs to import Brazilian beef again, Australian beef. When you shake it all out, I mean, we've had some massive volatility, like you said. Live cattle markets broke, $40+ off the high. I don't know what it was from the highs in feeders, $70, maybe it was 80. Massive break, massive amount of volatility in there from a day-to-day basis. You see swings of $6, $8, $10, sometimes in minutes, literally minutes, within the market opening. We have quieted that down a little bit. We're still seeing some, $4 or $5 ranges in here, but I think that based on the action, we've had a nice bounce off the lows from that limit down day after the announcement of that plant closure. I think we've gone, maybe 99.9% of the way at digesting the most bearish news. Now it just becomes maybe a process of kind of slopping sideways a little bit in these markets, which won't feel very good for a minute because, it's just rare that you get that big of a break followed by an immediate rally back to, new all-time highs. So we're going to have to kind of build a base in here. It could be still very volatile, but I think the worst is behind us. And, cash markets, the box beef market, still going to dictate which way the futures market goes. And even though we're starting to trickle some beef in here from other countries, we really haven't fixed the ultimate problem out there, and that is herd expansion. It doesn't look like that's going to happen anytime soon anyway.
Okay. Let's bounce over and talk about everyone's favorite topic, what China's doing this week. If you're looking at that, I mean, it's like we're going to do something, we're going to do something, and then nothing happens. And then, like we were talking about before we started recording, you brought up, hey, we're 60 days away from having a lot of beans coming out of Brazil again. what's that look like, and how's that going to affect any kind of deal that we have with China, which is going to be, oh my gosh, exactly the same thing that happened last time we did this thing with China. So I guess as you're looking at this, Chip, how are you weighing this, and how are you talking to your customers about this kind of this situation that we're in right now?
Yeah, it's a tough one, Casey, because I'm sure you are, as well as I, sick of talking about China, right? But unfortunately, it's such a massive part of the bean market right now that you have to talk about it. And part of the problem is somewhat related back to the current administration, almost a boy who cried wolf type situation where you get this announcement and some talking heads get on Fox News and CNBC and oh, we got an announcement coming out. We're gonna in the next week or 10 days, we've got an announcement coming out on China. We got an announcement coming out on an aid package to farmers. It's going to be great. You get a week, 10 days down the road, nothing. So the market is just hanging on wanting some finality to this. They want to see an agreement that's signed by both countries that lays out X, Y, and Z. China will do A, B, C, D, and it will be this many bushels. So far, you haven't seen that. China has been there sporadically over the last 2 or 3 weeks, buying some beans, bought a little U.S. white wheat. I think they bought a cargo or two of U.S. sorghum. But the amount that they bought of beans is probably just somewhere around 3 million tons. The initial talk was they were going to buy 12 million tons this calendar year. By my calendar, we've got about 4.5 more weeks to go of the year, so they better get to buying. And then 25 million tons next calendar year. All the while, Brazil planting more acres than a year ago. It seems like that's been for 2 decades. They plant more acres every year, almost, and I'm not exaggerating there. Yeah. They have a record amount of acres planted in Brazil. They have no weather problems to speak of. Within 60 days, they're going to have new crop beans coming out of their country. It might take another 10 to 15 days to get that out into the export channel. But the point being here is whether China buys or doesn't buy, Brazil right now looks to be on tap for a massive crop, and they're already cheaper than U.S. beans. So even if, we kind of push on the string and China agrees to buy some U.S. beans in the amounts that was originally kind of talked about, our beans are more expensive in the world. So we're going to lose every other customer that we have to right. South America, other than Mexico and Canada, maybe, to South America and Brazil, because they're cheaper. So this thing is far from over as far as knowing what the details are. It's frustrating that, we keep getting kind of the cheerleaders out, rah, 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 we're going to get an announcement, and we don't get one. Eventually, the market's going to get tired of waiting if we don't get one very quickly, and come to the realization that the longer it goes without some, announcements and some details of this trade agreement, the less likely it is that China probably is, realistic about it or even going to follow through. And also the more likely that we're about to get swamped in the world with a massive crop in Brazil. So, hopefully farmers have been able to take advantage of this rally. I realize it's not like it's, wild with profitability out there. We're trading, over $11, but a lot of producers, given the cost structure of this past crop, need $11. But I would remind you too that, and I've said this all along, I think going clear back here a couple months, Casey, I would bet more money that the Trump administration gets farmers a nice aid package to go on top of, $11 beans than I would bet on China saving us and buying, 40 million metric tons of beans in the next 4 months. I just don't think that economically makes sense to me with Brazilian beans being so cheaper. So my point with that is, if you haven't taken advantage of this rally, we think that you really should. If you want to bet one way or the other, bet that you're going to get some, Trump money to go on top of these bean sales rather than betting on China saving us. Because, sorry to break the news if you haven't realized already, China does not like us. They don't think of us as friendly. They never have. They never will. And if Brazilian beans are cheaper, they will follow, even though they're a communist country, they will follow the laws of economics and buy the cheaper source. And that's kind of where my head is when it relates to China. Could be proven wrong here. Casey, in 3 hours, they could announce a massive trade deal with all the details. But the longer it goes, the more I question whether it's even going to happen at all. And so that's a scary process.
Yeah, and you're 100% right. No one knows what's going on except for the people that are banging away at this deal. But when it walks like a duck, quacks like a duck, and flies like a duck, it's probably a duck. And it feels a lot like this is the exact same thing we went through last time we did this. China came up and they're dragging their feet, and all of a sudden they came in about a few things here and there when there wasn't Brazilian beef, Brazilian corn, Brazilian soybeans, Brazilian whatever. Then they came to the United States and bought the stuff, and it's the same concept. Nothing's going to change, right? They're gonna soak every bean that they can out of Brazil before they come to the United States and buy it, and that's no different than any other year, right?
No, and it's more so now, Casey, and they very quietly, China has over the last 10 years. I don't know the exact amount, but it is multiple tens of billions of dollars they've invested in infrastructure in Brazil, fixing roads, fixing rail lines, fixing river terminals, ocean terminals, putting a ton of money in the infrastructure of Brazil in order to get those beans. And very quietly, a couple weeks ago, CONAB, which is kind of the equivalent of the USDA only in Brazil, it's such a massive growing area. They don't maybe have quite as accurate of information as maybe what the USDA does, but they projected 177 million metric ton bean crop in Brazil. Now, Mother Nature is going to dictate, whether that's close or not. But if you crunch that out, it's something like a 6.4 billion bushel total production. We're raising 4.4 billion bushels here. So they could end up 2.5 billion bushels more than what we produced as a country this past year. Point being, that is a lot of beans. That's not talking about Argentina, Paraguay, Uruguay. They also raise beans in those countries as well. But just Brazil, you could potentially, some people have said it could be 180 plus million metric ton crop. That's knocking on the door of 7 billion bushels. That is, to me, a mind-boggling number, even if it's towards the low end of that. 6.2, 6.3 billion. Yeah. That is a tremendous amount of beans they're going to put out on the world market. And, China or no China, we've got some issues here. I think that, barring a massive turn for the worse in their weather over the next immediately, like right now, it turns and gets hot and doesn't rain for 40 days in Brazil. Beans face a big uphill battle just because of that potential massive supply that is about to hit the market here within, starting probably within 60 days, but for sure 90, 120 days out, it's just going to be a sea of beans that are $1 or $1.50 cheaper than U.S. beans. And that is the real problem I see in the bean market over the next few months in here, whether China buys our beans or don't. If they don't buy our beans, obviously that's a bigger problem. Even if they do buy our beans, there's a lot of beans that are about to hit the world market, it appears.
Yeah. Yep. And that is that's the problem that we're going to see.
It's a real problem. Going
to be a problem. All right, Chip, let's talk a little bit about what's going on over in the crush markets. You've seen some good margins. You see really some good, supply coming in from the soybean marketplace. So you're seeing that as a kind of a bright spot there for soybeans. As you're watching this market, Chip, what are your thoughts?
Yeah, that is probably one of the bright spots, right? And we had hoped all along that, the renewable diesel market and some of these, the biodiesel side of the equation would help with some domestic demand. And it really does appear that is happening, and that's a bright spot. Now we're still waiting, some more confirmation and a couple of the dominoes to fall on the EPA side. And that's always a scary prospect when you're waiting on the EPA to help us, because historically they've not been the farmer's best friend out here over the last couple of decades. But more and more of these crush plants, these biodiesel plants, are coming online. One of the most recent crush reports was by far a record, right? The industry's trying to have to kind of recalibrate things because always before, you get a monthly crush figure up in the 180, 185 million bushel range. That was a big month. This last one, we blew the doors off of 200 million. And so you look at that, that's by far a record number, but we've also added a couple plants along the way. So the industry's trying to figure out like how big is big on, the monthly crush report as we're bringing these plants online. But the bottom line is it is good, right? I mean, that is one thing that's probably a bright spot on the demand side in the bean market is crush capacity is increasing. If we got a couple more dominoes to fall in the right place from the EPA, things could really get really good. Now, I would caution everybody, though, it's not a one-for-one, bushel for bushel offset, right? If we lose China, the crush that we're adding from the renewable diesel side isn't going to be enough to offset every bushel we lose from China, but it will help, hold the demand base together. So very good signs from that aspect. Again, the EPA is going to, dictate some of this, and that's always a little bit scary to me because it's been a disappointing history of losses that have come from the EPA side of the equation. But, maybe with some of the personnel that are in there with this Trump administration, they're, going to take a little more pro-ag type of a stance out there. But that remains to be seen for sure.
Yes, it does. All right. Chip, appreciate you being on the podcast. If folks want to reach out to you and get more information about what you're doing over at Blue Reef Ag Marketing, what's the best way to do that?
Yeah, best way is just give us a call here. Our main office in Morton, Illinois, it's 309-550-7213. Because also check out our website. That's a new and improved website, Casey. It's www.bluereef.ag. So check us out if you can. Give us a call. I'll be happy to chat with you about your risk management plan.
Yep, and you're going to be out the Milk Conference doing a piece for U.S. Farm Report, right?
That's right. Heading out. I'm looking out the window here, Casey. We had about 4 inches of snow overnight, so hopefully they don't have many delays. But heading out to the Milk Conference in Las Vegas, going to be actually on the U.S. Farm Report panel. What do I know about milk? I know nothing about milk, right? I don't even really drink milk, but they wanted kind of a perspective of, what's happening on the row crop side. A lot of these dairies have a lot of, crop acres, and also the beef side of the equation has become, very important piece for a lot of these dairies going forward. So they want a little bit of a outside perspective on the grain side and the beef side. So happy to do that. Hard to turn down Vegas. It's going to be cool in Vegas, but as I look out the window here, it's like winter wonderland. So I'll take 50 degrees in Vegas over snow and cold in Illinois any day.
It's that cool thing's all relative, right? Just remember that when you're talking about 50 degrees this time of year. So, yeah, well, that'll be good, Chip. Make sure if you guys are at the Milk Conference, check it out. They'd always do a live taping of that when they're at those events. So check that out and talk to Chip a little about what you see happening there. So, Chip, appreciate being on the podcast. We'll catch you again next time.
All right. Thanks, Casey.
Stay tuned for more Moving Iron podcasts after these messages.
Looking for more accuracy, more productivity from your current planter? Let's get exact with precision upgrades from John Deere. Start with Exact Emerge and get accurate singulation and spacing at 10 miles per hour. Or choose Exact Shot to promote early root growth and cut fertilizer costs. And with Furrow Vision, save time by verifying seed depth right from your cab. Visit johndeere.com/planner upgrades and see why nothing runs like a Deere.
All right, welcome back to Moving Iron Podcast. Got Aaron Findle back on to talk about what's happening in the market. Aaron, how you doing?
Terrific, sir. Terrific.
Terrific. How much snow did you guys get?
Full of turkey and green bean casserole.
Yeah. Oh, yeah. I'm still reeling from that myself. How much snow did you get up there?
The deck is white. The grass is green.
Similar down here in the valley, yeah. We had a good thing about living out here is you might not get all the fun stuff that comes with snow, but you sure do get all the fun stuff that comes with cold weather, right?
Yes.
You get the wind and you get the 4 below temperatures.
Yep.
To go with that.
Last 2 days of November. -6, -8.
Yeah. Yeah. It's
Like, come on.
that time of the
That's-
year, man.
That's shaping up for a bad winter when it's that cold in November to end November.
And one thing too I love about living out here is that there's no easy transition into anything, right? You go
No,
from
because it was 65 3 days before that.
right, yeah. So and it was beautiful, nice day, no wind, be nice. And then here comes Friday, the wind kicks up, starts cooling off, and then it's just boom. And then here we are, and then I'm supposed to be 51 degrees sometime this week too. So it's
Yeah.
just,
Yep, I think Thursday is supposed to be pretty darn nice. So
there's no transition.
here we are.
Yeah, good times in the Panhandle.
We're in
All right,
first
man.
winter.
That's right. Yeah, first winter. We got 4 more to go, and then we'll be done. All right, let's talk a little bit about what's happening in the marketplace. Here we are at the end of the year. 1st December. This is typically we have about 2 weeks of anything that's really going to get done, and then it kind of starts to kind of taper off towards the end of the year. Looking at where we're at right now, feels like there's some activity still. Again, no one's getting rich. We're just kind of cleaning stuff up. It's all based on dollars and cents right now. That's what's driving the marketplace, like we've been talking about. We've been seeing things, but it is hemming up. But there is plenty of demand out there. As you're looking at this, Aaron, what are some of the stuff that you're seeing? Like, what's selling hot right now for you? What are people looking at? Like, what are the things people are out there trying to get their hands on right now?
Well, first of all, I would
Real quick,
say
though, on Black Friday, you had the buy one get one free tractor deal, right? And then you had that.
no,
Go-go?
I had
Okay.
a healthy reduction. Now, if you do the math to where 8Rs were once advertised, if we would do like a 3 tractor, that would
Yeah.
probably be a buy 3 get 1 free. But
Yeah, it'd be pretty
Anyway.
close to that. Yeah.
No. As a nitwit throwing a dart at a board and taking a guesstimate, that end of year have to buy-in,
Mhm.
it's legit. It really is true.
Yeah.
Everybody I've talked to in like the last 2 weeks, it's a have to. We haven't done nothing for 2, and it's like the whole farm.
Right.
It's 2 tractors and a combine, 3 tractors and a sprayer. Working with lots of guys that's exactly what they're talking about. And the first thing they said, man, we haven't done nothing for a while. We missed the boat when everybody else jumped in, and now we're sitting here with old stuff that we got to do something with.
Well, yeah, you think about when this started. I mean, if you go back and do the math of when the market started to contract, it was late 2022. When you really started things happening, it was 23, 24 that really drove the market down. But it wasn't gumdrops and candy canes like everyone's trying to make it out to be the second half of 22.
Exactly. And these guys, what they're trading, what everybody's got that they're trading in is that stuff that was 5 to 10 when the run up and scarcity and overstock 18 months all happened. Right. And then they're sitting there like, oh, well, don't do nothing now. What are we going to do here? Right. So, yeah, by the time you miss that 8 to 10 window, and now we're here, it's jumped into the 15 category.
Right.
Yep. So he moved from 5 to 10 to 10 to 15, which all those guys are like, I know that's gonna be a hit. Everything's so expensive, that's gonna be a hit. But my personal opinion with them waiting, it's better they waited till now, I think, than to have jumped in at last year's, whatever we call last year's year end.
Right.
Little bit that was there, because as a national market, I feel like everybody's getting more on the same page. There's, what's funny to me, you had your, say, group of 10 dealers or so of the big dealers that, bam, right away, jump on the auction world and get rid of this stuff, and then we're going to refocus and move forward. And they did that, and it hurt so bad, and then everybody goes, now what do we do?
Right.
Because this stuff still isn't moving. And then at the other end of the spectrum, you have, well, let's hold on to it and see what happens. Let's play it out, kind of come up with our own stuff. Reprice. Both ends of that spectrum are getting, not quite yet, but getting to that same middle ground where the buyer can then go, okay, here's where we're at.
Yep.
And they've heard Greg say and Casey say, hey, we've hit a bottom. In fact, there's some strength back in high horsepower row crops, which I see all day in the marketplace, because that, back to your first question, that is the number one thing guys are calling on is 8Rs.
Right.
Not, here's the kicker, still not sub 500.
Yeah.
5 to 15.
Yeah. And that's, we've talked
because
about that.
Because it does this.
Yeah, it does. And like we've talked about, I mean, we've talked about this since we've been doing this podcast. I mean, for the past 10 years, if you really start thinking about not 10 years, it's been 10 years. Yeah, it's been 10 years. If you start thinking about how those things come together, that's that niche marketplace where whatever you're trading in, you have enough, typically you have enough equity in the machine,
not have a down payment,
and not have to really have a down payment, or you're
to
writing a very small check to just be done with it. You know what I mean?
Right.
And and I'm going to use my air quotes on small check right here.
Right.
So that's that's what we're seeing, and that's where that, like you're talking about, that 1,500-hour tractor has always been a catalyst in these marketplaces.
Yep.
As kind of like that. It's the top of the peak, right? So
right now it's the only canary that flew back out of the mine.
Right. Yeah. Yeah. And if you watch that bell curve from hour ranges, right, it's a real steep drop off to 500, right? Because there's not a lot, again, prices, right? It's always been that way. But if you look on the backside of that, from 1,500, it's a very long,
right.
It's a more of a,
it's a 45, hill, not a 90.
Know? Exactly. Right. And that to me shows, I know it might not feel like it, but the stabilization in the marketplace, that's where it starts.
Right.
And it starts going from there. And it's just an absolute killer when you start looking at the pricing of stuff and where it's just like me with vehicles, right? Like I keep up on the tractor marketplace because that's my job, right?
Right.
But when I want to go trade my vehicle, I have no idea what my truck's worth till I'm ready to start trading it, right? And you start looking at it from.
I'm a little disappointed. I thought you'd probably have a pulse on it. A 2-year-old laser printer's worth this. A 7-year-old set of cutlery's worth this.
Well, I'll give you a great example of how crazy pricing is. Local dealership down here has got a used GMC AT4 2022 model, if I'm not mistaken. It's got 153,000 miles on it, and they still want $35,000 for that thing.
It's got how many miles?
153,000.
And they want what?
$35,000 for it.
That's a good sign, because my pickup's got 135 on the 23.
Okay, so then I'm like, well, God dang, what's my truck worth? I got 75,000 on mine, right? So I'm thinking, well, my truck's got to be worth shit. What I paid for it, right? Go and look it up, and it's nowhere near that. I mean, like, I don't know where these numbers are coming from, because what I'm seeing on my side versus what they're showing on their side are dynamically different, right? So you're like sticker shock. What the hell are you talking about, right? It's no different than on the ag marketplace.
I was just going to say,
you know, there's the same.
That sounds like tractors and combines to me.
And you're looking at, well, I've got a 7-year-old whatever with 5,500 hours on it, or 7,500 hours on it, or whatever the number is. And I'm seeing these 1 and 2 and 3-year-old machines out there that have 1,000 hours on them, and they still want 4 something for them, or
right
high 4s, type of thing for them. Go through and look at it. Well, there's a significant drop off in value when you get to a certain point, right? Now it's all relative, right?
Right.
It's the percentages
year to year. It's a different number. It's whatever the market is at that day, but whatever it is, that gets set in stone for a year, 18 months,
right?
Till something shifts it out. So yeah, that's exactly
The
where we're
thing
at.
about the marketplace is that the 1 to 2 year old machines where you see the biggest depreciation spread, right? Those numbers that percentage hasn't really changed. It's plus or minus a few percentage points every year,
Right.
depending on the marketplace. But it's not like, oh, the market's down. So we went from 25% last year depreciation to 45% depreciation now. That's not what's happening.
Right.
There's not that swing. It might be 25 to like 29, right? Or 29 or 25 down to 22 because the market's a little better. But it's plus or minus 3 to 5 percentage points depending on what's going on in the market. The difference is, the last time I came in the marketplace, that 25% might have been 50 grand, right?
Yeah.
And now that 25% now is 150 grand. That's a huge spread. And that you're like, oh my God, you want me to write this bigger check to do these things? But at the end of the day, it's like the percentage is still the same. It's just the numbers are so much bigger.
Right.
And that's the part, even me as a guy going out and buying a truck, or me as a guy who valued used equipment, or whatever that situation is. I can't tell you how many times I've looked at a piece of equipment over the last 2 or 3 years being like, there's no way that's right. There's no way that I need to be drawing, this should be drawing this much money, right? There's no way you should be doing that. And you go back and do the math and you look at the percentage of depreciation over the last 10 years, it's not any different. It's really not that different. It's just the numbers are so much bigger now that people get smacked in the face with this.
Right. Exactly.
Holy crap. You want me to I got to put down how much did you say? Right. And there's how much equity what I got. I still got to put down another $75,000. Are you kidding me right now? And that's the part that it's just, that's that wow factor that comes into buying something right now.
Right. Back to the tractor thing with what guys are buying right now. I literally have had 2 guys, so more than one, but I've had 2 guys call and be like, I need something from a 280 to a 370. Any of them will work. You're like, huh? It's just got to be 299 or less. And you're like, all right. And I'm like, so like a 282. He goes, I'm not buying a tractor over 300. He goes, whatever you got, that's 299 will dictate which of mine I trade. I'm like, oh, I kind of get that. Like, normally we'd trade this one because we always trade the planter tractor first and work our way backwards. But we'll do this one because he's got that tractor, and then next year we'll look again. Like, I kind of get that. That's one way to do it, but it's funny to me. Like, 7 different models will work. It's just got to be under this threshold,
right?
Then about your pricing point, I talked to a guy for like an hour yesterday, and kind of walking him through. He's got an odd situation, but kind of walking him through what he's got going on his farm and transition and all this. And he's, he's an agribusiness day job, side hustle, whatever you call it. And we're talking about tractors. He's like, now what I don't understand, cause he called about, we talked about that 2:30 Black Friday video,
Mm-hmm.
So that's kind of what he's after. And as we're talking about it, he's like, now he goes, you can find the older series with more hours for more money. Why is that? And I said, everything starts off with a new and there's downward pressure. I said, and really, when all of this started, none of those 8Rs were back yet. And we had all the 8,000 Rs, and they doubled in price overnight because there weren't any. I said, so as you get a little reality set in, the problem is it's not nearly enough. The downward pressure from up here is so great that nothing below it is exempt. Not even a 5,000 hour sound guard is exempt.
Right.
It's gone from 90 to 80.
Yeah.
But it hits everything. I said, personal opinion, the reason you see an 8XXXR higher than an 8R is because it was either we have to focus on this horrible glut up here, that'll fix itself, or no, those are still selling. We got to worry about this. Either which was wrong at the time, looking back 3 years. But, that's what I told him. I said, we're just in a market where everything up here fell so hard, so fast that there wasn't enough time to correct this back here. If it's already there, now as you're trading, yeah, you can fly the seat of your pants, fix that right now today. But if it's already there, you got to work through that unless you adjust it and whatever. And he's like, so they're wrong. And I'm like, I said, here's my opinion. If you're spending $250,000 or more, buy what's rolling off the line. I'd buy a 1,500 hour 8R before a 1,000 hour 8XXXXR.
Right.
So, and, to his point, which he brought up, Casey's favorite thing next. Oh, well, you're probably right. Because as we go to autonomy, I'm going to want that newer series. And I'm like, hell yeah, there you go. So I mean, there's a whole other issue in the market that really, nobody talks about, and just kind of, they're working themselves out. The beauty of it is, from the dealer standpoint, there's 10 of those, not 100.
Right.
Which is also why they didn't get the focus and attention and all that. And they've taken care of themselves since 2008.
Yeah.
So all their new cousins showed up at once.
Yeah, that was the problem. That's the whole problem with the market right now. I mean, if you had,
and it's not just ag, dude.
it's
Cars,
everything.
You
Anything
can buy a
where
new pickup today, I bet $15,000 cheaper than you could 3 years ago.
Oh yeah, for sure. The thing about,
still $90,000.
no, it's crazy. I've been looking at cars for my wife.
What if it's not a high country Duramax? Well, then it's only 85.
Well, I was at the dealership the other day, and there was I can't remember. I think it was a Yukon Denali with the whole, like, the longer one, whatever they call it, XL. There you go. And
for an
and
XL man,
it was ultimate package or whatever it was.
Ooh, yeah.
It was $105,000.
Yeah. And
that was with the, like, hey, the sticker price is blood. We're going to sell for 105 because we love you. I'm like, wow, 105. I don't want to live in this thing, dude. I just want to drive it.
Mm-hmm.
I mean, it's like some of that stuff you're looking at.
Just think that thing's $105,000. Get in it, drive down to Denver, trade it in.
That's where we're at.
Could you imagine?
Oof.
I bet it's 70. I bet it's 70 at most.
Probably.
Wow. Hey kids, who wants to light 30 grand on fire?
Yeah, that's just
I'll
crazy
show you a
market
trick.
right now.
Oh,
And
man.
couple that with 6.5% interest, 7% interest, 8%
Right.
interest, whatever it is that you're doing, and that's the thing that just keeps compiling all this stuff. Is that it just keeps making it worse.
But you know what's affordable? What's not expensive in this world?
So,
A Farm Journal app subscription. That's affordability all day, every day.
$99 a year.
There you
Get
go.
some. There you go.
Everything you need.
I think that's right. I could be wrong on that, but I think it's right around there somewhere. You think I know that, but pretty sure it's $99. But they have, when you're watching these things come together, the flip side of all this stuff is that the reactions of the marketplace that we're seeing,
Mm-hmm.
as auction value settles down, retail numbers are coming down, and there's a sweet spot there you're trying to get to, and it always ends up being in that sweet spot. Things keep plugging along.
The
But-
percentages narrow.
The percentages narrow up, and they're starting to see that
Yep.
across the board. It feels like that has gotten to a point where what I used to call the 120% rule now is really kind of like 135 or 140% rule. And that's really where it's kind of settled in at. Auction values got to come way up to get to 120%. I think where it makes sense for people to do that. Ultimately, at the end of the day, what we're seeing now is we are setting the table for 3-year trade cycles at a minimum.
I was just going to say, in 3 years, it'll be a whole different world.
The idea of, we've talked about this, I think, once or twice beforehand, but what used to be 500 hours now is 750 or 1,000. What used to be 750 or 1,000 is now 1,500 or 2,000 hours. I mean, because people have kept stuff for so much longer. This particular one had really nothing to do with, I'm going to run it longer because of dollars and cents. There was nothing available when I was ready to trade.
Right.
So now you got this whole next gen of trades coming in that are a little bit longer than what most people would have done. But that being said, where you're sitting at now is the conversations I'm having with guys when they call and ask me questions about stuff is, are you prepared, if you want to go out and buy that, are you prepared to put, 1,000 more hours on it than you're used to doing?
Right. Yeah.
Are you prepared to run it for 2 more seasons than you normally would have? Right. So if you typically are running it for 3 seasons now, are you good going out to 5 or 6 years before you trade it in? Right?
And other than getting out of the shiny and the new smell and all that kind of stuff, throw Power Guard on it, put machinery scope on it, and run it.
Yeah. Yeah.
You don't have to trade every year.
Yeah. No, you don't. And
you
there's
don't
some
have
stuff
to trade every
into,
2 years.
right. There's some stuff that comes into play there, but
I'm actively on here trying to ruin the machinery business. People, come on, help me.
help me help you. As you watch those things come into play, like those are the conversations that people are going to start having. And
right.
I've even, you hear people talk at different shows you go to and stuff like that. And I hear a lot of guys on the producer end saying, like, my dad only did this with 5 tractors or 3 tractors or 2 tractors or 2 combines. Yep. And our operation really hasn't changed. Our operation has changed, but the efficiency of the machines that we're using now are significantly greater than what they were 20 years ago. So now when you start looking at, do I really need to have 3 combines? Maybe 2 combines is all I really need to have, right? Do I need to have 6 tractors when I really only needed to have 4, right? So those conversations are starting to happen. Do I, instead of running them for 250 or 500 hours, may I run them for 750 now, right? So instead of 5, I'm going to go down to 3 and put more hours on the machines I got. Like you're hearing those kind of conversations take place.
Oh yeah, I've dealt with that. Guys that really shocking with for it to happen in this environment, other than exactly what you said. We're going to puke out more now, but we're hanging on to this for a while.
Yep.
Because for that guy to go, well, we usually buy a 1,000-hour tractor. Now he's going to go buy a 500-hour tractor.
Yep.
That could be $100,000 jump.
Yeah. Yeah. And that's the, and that's why I talk about these buying brackets all the time. I mean,
right.
These guys now, used to be like, you could jump in and out of these, like 1 to 2, like, when we first started this business, how many guys were buying new combines and running used tractors?
Yeah.
I mean, that's a pretty common thing. It was not uncommon to see that happen, right? Every 3 years I buy a new combine, but I like to buy those 1 to 2 year old tractors, right?
Exactly.
And that's my fleet, right? That doesn't happen anymore. I mean, I'm not saying it doesn't happen, because it can very well happen, but it's just not that conversation is just not something you hear a lot of anymore.
It still happens, but the tractors are 2 or 3 years old and the combine is 3 or 4.
Right. And that changed.
The trade numbers are still higher.
And it wasn't uncommon to have a guy that would jump in and out of these different buying blocks. And my definition of buying blocks are like, you have a 1 to 2 year old buyer, a 3 to 5 year old buyer, a 6 to 10 year old buyer, and then 10 plus, right?
Well,
go ahead.
Finish.
I was going to say, so when you're looking at how those people coming in, no one was married to a certain thing. They were married to certain machines in each one of those buckets, right? But not like as a whole, my farm is boom, right? Well, today's marketplace and over the last 5 years have kind of like those boxes aren't open walls anymore. They're like solidified, like steel doors that are welded shut. Like these, you're here, right? And this is what you're going to do. Now it might be, hey, I'm buying 1 to 2 year old combines and 3 to 5 year old tractors, or vice versa, right? But some guys are like, I can afford to buy and operate within a 3 to 5 year old across the spectrum.
Right.
And that's kind of where I live at.
To that point, Casey, look at, I'll say like the maybe three different run-ups in my day of machinery. So you take like the 6 to 9 era, 06 to 09. You could have jumped in any box anywhere at any time.
Yep.
And the difference is negligible.
Right.
Okay. Then let's venture down the road to the 11 to 13 slug. Harder to do.
Right.
But still feasible.
Right.
Not near the gap that you would see if we had, say, like a 17 run up before the 21 run up. That'd have been astronomical, in that narrow window. So you go from your 11 to 13 run up to the 21 run up. There's your point. Those are concrete walls, and no longer do you get to float from box to box. There's a steel door, and you swipe your card to hopefully get it open. And if it opens, don't look at your balance.
Right. Yeah. Well, that's one thing too. I mean, when I started doing this 20-some years ago, you'd see a guy that would have a 10-year-old combine, and he would come buy a 2-year-old combine.
Right.
And he'd run it for 8 years and put it in the box. Now that same guy would buy a 10-year-old, trade his 10-year-old combine in for a 6-year-old combine.
Right.
And run it for 4 years. And that's just, it's just, things have contracted to down to the point that, and then now things have contracted that he's probably not running it for 4 years. He's probably running it for another 4 years. He's put 8 years on the same machine, but it's 4 years older when he buys it than when he used to buy it. So then like that just compounds the thing. So the point I'm making here on all this is that what used to be, I just think it's going to get harder and harder and harder to find that late model, low hour something, because of, we talked about it last week on the air, that the number of 25 model machines that are getting delivered, right, is this big, like this tiny little bunch. Right. And the same thing's going to happen again in 26 order writing period. It's not going to get any bigger, right? No. So that means that the 26 machines that get delivered in 27 is even smaller than the 25. We're about the same. So now you've got this thing, and that, I don't see where that, as the economy gets better and those kind of things, you're going to see more new orders and stuff like that come up. But I don't think it's going to be this big wave like we saw coming out of 2008, 2009, that this giant tidal wave of equipment that hit the marketplace in 2011, 12, and 13. I don't think we ever see that again in that volume.
I don't think so either. We got a lot less buyers than
you got a lot less. You got
15 years ago.
And the biggest reason too why you saw the big wave of stuff come through at COVID was that might have felt like a huge buying cycle, and it was. A lot of people came in and bought stuff. There's no doubt about that. What compounded that was when it all got delivered and how much stuff hit at one time. But now that we're looking at this huge run up in price, 4% now. I've been saying this for 15 years. 4% is a big number now. it just keeps getting bigger, right? Those price increases that you see coming through are just, they next thing you know, you're at a 3% price increase used to be $5,000. Now it's $15,000.
Right.
You know what I mean? So it's like these price increases that you see coming
on a rear blade.
Rear blade. And that is just the cost. That's just the cost of doing business. And unfortunate. If price increases didn't happen, and I'm going to get hate mail for this, but if price increases didn't happen,
I'm starting mine now. Hold on.
If it goes up, if you typically you see 3%, you don't see a price increase, and it brings up used with it to some extent, not all 3%. There's a portion of that gets attached back to the used piece.
Yeah.
If it doesn't go, if you don't see those things increase just because of inflation and everything that's going on with currencies right now, if you don't see that, when you go back in to do it again, the inflationary aspects of your money as things gone up, that's actually gone backwards probably 6 or 8%.
Yeah.
Just because of where it's at. You know what I mean? So
not only that, everything
like that, right?
The
So
farm,
it's just
the farm
the value
itself.
I mean,
it all trickles down.
Yep. And now there's a breaking point somewhere in there, but I felt like I think we felt that breaking point a couple of years ago, but there's at some point in time an alternative shows up that drives prices in a different direction.
Right.
And where's is that upgrade kits? Is that autonomous things you're going to reuse your machines, do different things with them? Like, what does that look like? And I think that's right. But I think that's what we're talking about, right? What's going to drive down the price of equipment is the amount of time of which someone keeps something.
Yeah.
Right. So if you're a manufacturer and you're producing a lot of stuff, there comes a point in time to get people to come back to the marketplace. There's 2 ways you do that. You incentivize that, right, with programs.
Yep.
Right. Or you change your pricing structure, right? You have an XLT, Lariat, King Ranch, and Platinum or whatever the models are, right? That's when you start looking at those kind of things as they move through the cycle. That's the reason why when you go buy a car, there's 67 different trim packages to pick from.
Right.
Because they hit every spectrum of things that they run through, right? And the manufacturers say, well, you can, your specs are this, that, and the other thing. Well, if you go back and look at how specs have come through the marketplace, what's standard today used to be an option somewhere down the line.
Sure.
You know what I mean? I mean, like, the reason why crank windows aren't a thing anymore is because people quit buying them when power windows came out. And more vehicles got power windows. So finally they said, oh, cool, well, it looks like everybody wants power windows. So guess what? That's the standard option now.
Yep.
We can now charge you more for your vehicle. And it's the same thing on the tractor side of the thing and combine side of the thing.
Sure.
That, all these different things that were once an option, are now standard equipment. And that's not wrong. That's just like why it is what it is. People want this, so we're just going to package it in there now.
Not only that, but an 8R410's an 8960, man. That gets lost in the shuffle too. An 8R230, the baby 8R. That's why I said that on that Black Friday deal. Everybody, oh God, that's tiny. It's an 8300.
Right. Yeah.
Once upon a time, it was, we don't need one that big.
Right. Yep. And that's
the world we're in, bro.
It's the evolution of everything, right? Everything evolves, right? And now we're talking about. Last week we talked about.
Now we're going backwards to 10-foot robots everywhere. So hammer down.
Well, last week what did we talk about? How is a 900 or a 640 horsepower tractor ever going to survive now? You know what I mean? Like we're talking about 640 horsepower,
right?
And we're talking about. Well, I don't know. How's that going to fit in the market now? I mean, it's not it's just kind of in the middle of the road now.
And we talked about whatever you're pulling with the 830 should have a deed.
right. Yeah. It's on zip.
And you have to go through probate court to get rid of it.
Right. Yeah. It's just, but that's evolution stuff, right? I mean, how many times I used to watch this all the time at the dealership, those old John Deere Day videos. Oh, and I can't remember what tractor it was. It was a black and white deal. And but it was auto reset on the 3-points, and they showed them going through a ditch, and the 3-point was staying where it should be. And the guy driving it was like, I don't know how they could ever make this any better. Right. This is the greatest thing ever. How could they ever improve on this?
This seat has a whole inch of padding. An inch.
And I watched those videos and all that stuff. Even the guy that had the scarf over his face on the combine run because he's been eating Milo dust for 6 weeks. He's in his mind like, this can't get any better. I don't know how this could possibly get any better.
Right.
I don't know if I had something in front of me, maybe a box or something around me, maybe that'd be all right. But I don't know how it could get any better. It's just, and everything just keeps plugging along. And the creature features that make things more comfortable, and make things more durable and last longer. Like all these different things just keep keep coming into play. And somebody's right now is looking at a combine that drives itself and self-adjusts and does all the stuff that it does, thinking like, I don't know how they can make this any better. Well, someday there will be something out there that makes that combine look like such an arcade. Oh, that was so cute.
I don't like it when you say things like that. I find it offensive.
Well, it's just a simple thing like the SoundGuard cab, right?
My machinery geek heart cannot handle such kind of discussions.
Think about the SoundGuard cab is a great example of that.
Oh, yes,
that was the greatest cab ever to get invented, right? And now that if you have a SoundGuard cab now, it's like, it's so loud in here. Like, I don't know. Like, I'm ready to pull my hair out because it's so loud inside here.
I can't stretch my legs out and put my feet up on the little pegs.
It's like stuff like that.
Sideways in the seat.
Yeah. And little things like that just show.
You can. I'm 6'6" and I do it.
it's just those little things that keep coming along, and you look back on that stuff like that was so cute back then that people thought that was great.
Power shift.
Look where we're at today. Yeah. Little things like that. All those little nuances that come into play that change the market dramatically are now just a footnote in history of, oh, wow, well, that was a stepping stone to this, right?
Yep.
You know, we're 5 iterations from that now, and we've got infinitely variable transmissions.
The 8Rs, the 8R 30th, 8000 series 30th birthdays this year.
Yep. That's crazy to think about too, right?
30 years.
Yep.
And a lot has changed.
Yep.
I remember when they came out, what? That armrest, that is never going to last.
Yep.
Hell, that thing's all little bitty switches. That ain't going to hold up. Send that to a feedlot for 30,000 hours. A lot of them there, still running every day. So
Still running every day. Yep. For sure.
It don't just have to be levers banging around. It
That's
works.
right. That's exactly right. Well, from my cat days, I remember when the M Series motor grader came out, and everything was joystick control, and no more. You didn't have 15 levers anymore. The number of guys are like, you guys, I'm going to go out and buy every 140H I can find because I'm not doing this. This is ridiculous, you know. And here we are. You know, I think everything's got a joystick in it now. I don't think anything's got levers on it anymore.
Ugh.
So it's just the world that you live in. So
Well, great.
things
Don't
progress.
even have a steering wheel.
Yeah, it's all joysticks, dude.
Yeah.
That's crazy. But
Ugh.
what used to be, oh my God, this is never going to work, to, I don't know how, I'm not really ready to go back to the way things were, right? And that's, I love square body Chevy pickups, but I don't know if I don't want to drive one every day.
I have one, and I hate driving it to town. And it's nice. It is a really nice one. But, dude, Shadron's 50 miles away, you know, and I drive it up there so the kids can have it at homecoming and all that kind of stuff. That's miserable. It's miserable. Your Cruise has like a 20-mile-an-hour variance in it. And,
Right.
Oh, God.
Yep. It's just it's what you get used to.
Right.
And as technology and
Like,
and
I would
advancements
rather
and stuff,
sit in a 7810. I can't afford a 7810. So I sit in Sound Guards. There we go.
Right. Yep. There you go. Okay. All right. Good spot to stop. Aaron, folks want to reach out to you, get more information about High Plains Wholesale. What's the best way to do that?
Well, tell you what, you can catch High Plains Wholesale specials, stills, and videos on Facebook. Brain went blank. On Facebook, we got a page. We got a TikTok account. Put them videos on there. I share the same videos and throw a special on once in a while myself on Twitter by my name. And you can catch me on Facebook and LinkedIn. Or call me, text me, 308-760-1193.
Right on. Find me Facebook, Instagram, X, TikTok, LinkedIn, a bunch of other places, either at Moving Iron LLC or Moving Iron Podcast. You can find it there. You can find the audio version of this over at AgWeb under the podcast section. You can find it there, or you can go to Farm Journal's YouTube channel and you can see the video version of this as well. So good stuff there. 2025 is about the books, and I'm glad. And it's been a rough year for a lot of folks in about any industry that you're looking at here in the United States. And it's 26 hopefully looks like it's a little bit of a brighter spectrum as we move through it, as you look down the pipe here. So as we put a bow on this year, I want to say thanks to everybody that's listened to this podcast. I want to say thanks to all the people at Farm Journal for helping me put it out there. So hopefully there's some stuff there. You can, if there's ever anything that I can do for you, by all means, reach out to me on any of those social media sites, and I'd be happy to walk through whatever I can with you while we're doing that. But special thanks to Greg Peterson for being on this week, as well as Chip Nellier and Aaron Finnell for being here as well. So with that, I'm Casey Seymour. Let's go move some iron, folks. Out.
Thanks for joining us. We'll see you again next week. And remember, Moving Iron is available on Farm Journal's YouTube channel and anywhere podcasts are found. So until next time, let's move some iron.